Good afternoon, ladies and gentlemen, and welcome to the CORERO Network Security PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, all questions submitted today will be reviewed, with responses published on the Investor Meet Company platform where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand you over to CEO Lionel Chmielewski and Interim CFO Andrew Miller. Good afternoon.
Good afternoon, everybody. Thank you for taking the time to attend the presentation today. I'm here in London with Andrew Miller, our interim CFO, and I'm the CEO of the company. We'll make a presentation around the H1 2022 results. We'll give you an update on the strategy, and we'll give you a few words about the outlook for the rest of the year. So that's basically the agenda for today. Feel free, as Jack mentioned, to ask questions at the end of the session, for the end of the session. So I know that some of you have attended the previous one we've done about a year ago, a little bit than a year ago, sorry, in April. We're going to do this one around the topics that you can see here. So an exact summary of what we are announcing. We're going to give you a few words about the company and what we believe the unique proposition is. We'll go through the financials. We'll go very briefly through the solution and the products. We'll say a few words about competition and how we differentiate versus the competition. An update, as I said, on strategy and growth, and then we'll wrap up and give a few words about the outlook. So what we are announcing today, or presenting today for the announcement that we made on Tuesday this week, are the results of the first half. So we are continuing our growth trajectory. We are delivering financial records and new financial records. So all the KPIs are moving in the right direction. You'll see, and we'll talk about some of the initiatives, but we continue to invest in the business to assure sustainability and future growth. And we've put a high focus in sales and marketing, and we'll share some numbers around that. We are launching a number of new sales and marketing initiatives in order to grow the top line, to increase the market coverage, and to increase the awareness around the company. And we have continued to invest in product and solution in order to maintain our technology and innovation leadership. And what we've done successfully, I believe, in the first half of the year is to have hired a pretty significant number of new talent in an environment, as you all know, that is quite challenging in terms of being able to hire. So on the financial side, you're seeing here, the different KPIs, order intake, some people call it bookings, revenue, EBITDA, and ARR. And Andrew obviously will go in more details, but as you can see, all the KPIs are moving in the right direction. We had the first half a record in order intake with a growth of about 22%, reaching almost 11 million versus 8.9 million last year, same period. Record H1 group revenue, 6% up at 8.8 million. ARR is growing 13.6 million, plus 21%. We continue to have very solid gross margins at 88% for the first half. EBITDA 0.9 versus the 0.1 we had first half last year. We have a record in adjusted EBITDA 0.3 million and net cash 5.8 million. So you see we're all moving in the right direction. In terms of business highlights, we continue to see lots of momentum on the market. The market itself, the DDoS market itself, is growing. There are many more attacks every day, and we are growing in that market and probably faster than the market CAGR. We had 21 new customers in the first half, and we had 8 of them through our strategic alliance, Juniper. We're now very international. We are doing business in about 50 countries. Obviously, we're very strong in some of the region or some of the countries like the US and EMEA. And the thing that is important to mention is that we got 18 new countries over the last 2 years. So as I explained about 2 years ago when we launched the enhanced strategy, becoming more international, more global was a very important pillar for us. As I said, we have invested significantly in sales and marketing. We grew, in terms of number of headcounts, we grew by 32%. So moving from 19 people in sales and marketing to 25. We had some very important hires. We hired a new chief revenue officer, solid profile, obviously good experience in cybersecurity and good experience in technology. We hired the VP of international sales, what I would call rest of the world international sales, so EMEA and Apac. We hired many more people like VP sales ops and many more people in the regions. We're trying to balance now resources between US and rest of the world. So we hired people in Apac, in Australia, in Singapore, hired people in some other geographies in EMEA. We have added as well some additional resellers, which is a channel to the market for us. And we also won a number of new references, new customers in some interesting verticals like fiber broadband operators. That's very, very important. We have put a very high focus in growing the top line, and the way to grow the top line is to get more leads, more opportunities. So there's been a number of initiatives that we've constructed and launched in 3 domains in order to basically address the 3 routes to the market that we have. One is for direct approach with the strategic account. Number 2 is alliances. As you know, we have a strategic partnership with Juniper and GTT. So we're putting more resources around that. And the third route to the market is around channels. So that's basically distributors and resellers. They are generally local. We strengthen, because you heard me saying that many times, we strengthen the number of people or the resources around strategic alliances and channels. So we hired the VP of Strategic Alliance. We are working on new campaigns with Juniper and GTT, and we are doing further initiatives with them, attending roadshows and things like that in order to increase the awareness and grow the business. Market trends, and I think that's an important one. As I said previously, the number of daily attacks has increased significantly. It's doubled over the last 2 years. The attacks are becoming more complex, more difficult to tackle, and hence more impactful for those who are not protected. On our side, and we're measuring that obviously on a, I would say, daily basis almost, we did mitigate about 339,000 attacks in the first half of the year, and that's about 20% higher than what we had in the first half of last year. Also, I mean, because of deployment of 5G networks and things like that, I mean, the bandwidth, the capacity that is being vehicled through the networks had increased significantly. So 100 gigabit per second is now becoming important. And that's a huge opportunity for us, obviously, to upgrade our existing customers and provide to new customers with protection for networks that have that type of bandwidth and capacity. In terms of competition, there's more and more competition on the cloud-based, DDoS protection providers, which is not what we're doing as our main activity. But the landscape on-prem DDoS solution provider, which is our main activity, the competition there has not changed. So basically, we're still seeing the same competitors in the market. In terms of solution offering, we are investing, as I said, a lot in R&D in order to be ahead of the attackers when they deploy new techniques for attacking targets. So we've invested and launched a solution that addresses the carpet bombing attacks. And also we've put lots of resources in what we call our service portal to give better visibility, to give better reporting tools and analytics tool to our customers, especially our enterprise customers. The thing which is very important, and I think that's one of the differentiators that I'll explain later on, we are detecting and mitigating most of our attacks automatically. About 98% of the attacks are automatically mitigated, and our competitors cannot say the same. So for those who don't know the company, a quick snapshot on who we are and what we do. So first, we are the specialist in on-prem DDoS mitigation. We have very high performance. We're dealing with the attacks automatically for all the cases or most of the case, and we do that real time. It takes us very, very short time to detect and mitigate attack. So that's the technology differentiators. We are a public company. We're traded on the AIM market on the London Stock Exchange, headquartered in London, but we have offices and people in Boston and in Edinburgh. Edinburgh is mostly R&D. Boston, we have operations, CTO, marketing, and some other function. In terms of the segments that we're addressing, I mean, our sweet spot is around service providers, telecom service providers and ISPs, hosting providers, SaaS enterprise, data centers and colocation. We also deal with edge providers and enterprises. Enterprises, we're mostly tackling that segment through partnership, either with GTT or Juniper. We are protecting either directly or indirectly thousands of organizations. And as I said, we are very international as we are deployed in more than 50 countries. We are investing a lot in sales and marketing, as I explained, but we're also investing a lot in R&D. So roughly 16% of our top line goes into R&D investment. We are generally speaking between 15 to 20%. And something which is important because they are a avenue for growth, we have strategic alliances with Juniper and with GTT. Juniper, we're basically adding a DDoS protection stack on their routers, and GTT, basically, we're helping them to monetize DDoS mitigation when they're selling connectivity to their enterprise customers. We also have some technology partnership with Newstar for hybrid customers who want cloud, and that's the part that is providing by Newstar, and people who want on-prem, which is what we are providing. And then we have a partnership with Splunk, a technology partnership with them for the analytics and the reporting tools. So what's the value proposition and the unique investment opportunity? So first, we are operating in a large market. The market is about $1.5 billion, is growing at about 15%. If you're looking at the very sweet spot market for us, it's probably half of that, but still a very big market. And then you know what's going on in terms of network deployment, network architecture moves into the right direction for us. So with 5G, for instance, people have higher capacities, they have a higher density of network and lower latency. Hence the importance to be protected in such an environment, because if you're not, the impact could be very, very big. We believe and this is not me saying that, this is our customers saying that, we believe we have the best ratio performance over TCO in the industry, especially when you're talking about on-prem. We're quick, we are automatic, and we're very precise. All the expertise is an in-house expertise. We develop, design everything in-house. We've been investing for 8 years in DDoS protection. By the way, that's the only thing that we do. We're 100% focused and specialized in DDoS protection, and we've invested roughly 35 million over those 8 years in R&D. We have, for a company our size, we have an amazing list of customers in all the domains that I explained. Small customers, but a huge number of large customers that are the leaders in the different domains. And we have customers in 50 countries. 60% of our revenue is recurring, We have an ARR, as I explained, of 13.6 million. And basically, we are helping our customers on two fronts. One is on protecting their own network. So we deploy our DDoS solution to protect their own network against DDoS attacks. And two is to help them to generate incremental revenue by selling DDoS protection on top of the connected services that they're selling to their customers. We have a worldwide, very high-grade, first-class support. We have customers as far as Australia, and we're supporting them 24/7 by 365. We have a huge expertise in terms of SOC and in terms of operations. We are global. It's very quick to deploy our solution because our products are very good. And also, because it's mostly software, we can deploy very, very quickly. So in terms of, installing, deploying, and then on the pure financial side, recognizing revenue could be very, very quick. We could scale pretty quickly, both in terms of direct approach, but also using the leverage that we have with our strategic alliances, like Juniper, GTT, but also with the channels. And then we don't have any in-house supply constraints. We have a subcontractor with whom we're working very well, and we could deliver, even when there's a component which is a hardware, we could deliver very quickly. So all what you're hearing about, the long lead times, quarters or years, we're not impacted by that because we manage that very, very tightly. In terms of financial performance, as I explained, we've been growing significantly over the last 2 years. We almost doubled the size of the business. We are now profitable. We have solid gross margin, a high level of repeating and recurring business, and we're spending smart. And last but not least, because I believe it's extremely important, we have an amazing team, both in terms of operational and management, who have decades of experience in technology or in cyber. The market dynamics, I've explained that. So a large market, the SAM is about 700 million, 30,000 daily DDoS attacks, so doubled in 24 months. And what we're helping our customers with, I've explained that already in the previous slide. In terms of how we get to the market, so clearly we have 3 types of solutions, and I will explain later on, but basically a solution that we sell direct to our customers. This is our threat defense system, a solution that we deployed through Juniper. This is a threat defense director, so that's software only, and a hybrid solution that we deploy in conjunction with new stuff for customers who want cloud and on-prem. And then obviously we have a full portfolio of services going from consulting services to installation, deployment services, support and maintenance, and managed services. Our go-to-markets, as I explained, strategic alliances, indirect through channels, and direct sales. In terms of customer segments, I went through that already. Type of revenue, so we get term license revenue, revenue share type of revenue, DDoS as a service, and then we have CapEx type of revenue. A quick snapshot of our customers. So the segments I already explained, the ones that we putting most of the resources and focus, service providers, hosting providers, SaaS enterprise, and colocation, and some that we're addressing through our partners. You see some of the logos here. We have many more. We're not putting all of them. We added 2 more since we last spoke. OneCode, who is a service provider focused on gaming industry. This one is in Australia, and a fiber broadband company in the US. The thing which is important is that we're very global on all the continents, in 50 countries, thousands of organizations, 18 new countries over the last 2 years. And the thing that is extremely important is that our customers are very loyal. They start with us, they grow with us, either when they expand geographically or when they densify their network. And that's very important because that's generating recurring revenue. And you could start pretty small with orders or POs that are like 100K, and then you can reach with the 10 customers over time, millions of dollars. We're not losing customers, by the way, so we don't have any churn in terms of number of customers. So let's go now into more details regarding the financials, and I will pass that to you, Andrew.
Yeah, thank you, Lionel. Lionel highlighted some of the key financial highlights, which I'll repeat on this page. The things that we track as a management team. Obviously, order intake is very important and reflective of our growing business. Revenue, in terms of how we recognise that order intake, is up. ARR is a very important statistic, and that's growing strongly. ARR represents over 60% annual recurring revenue, so that's the recurring elements of our business is over 60% of our total revenue. So a key indicator for us. EBITDA, the business moved into profitability in 2021 and continues that trend, and our cash remains strong. We have net cash of 5.8 million at the end of June. Moving on to a little bit more detail in terms of the income statement, you can see obviously that the revenue line. It's worthwhile pointing out on the gross profit line that our margins remain strong. Our margins for the first half of 2022 were 88%, up slightly from the comparable period, and that's largely driven by product mix. So our different lines of business have different margins. Obviously, software is very high margin. Our services are high margin, and depending on where the mix is for that particular quarter, will determine the margins. But our margins, the key message is our margins are very, very strong, and the key focus, as Lionel will mention and will elaborate on further, is growing the top line. Because as we grow the top line with 80% plus margins, the majority flows through to the bottom line. On the operating expenses, on the face of the income statement, you can see our operating expenses were 7.7 million for the half year ended June 2022, down from 8.4 million for the comparative period. That is despite the fact that we've invested. So you'll see in the highlight, we've invested in growing the scale of the business, and that's planned investment that we planned from the start of the year, an increase of 1.1 million. The majority of that is sales and marketing. That has been masked by foreign exchange differences of 1.6 million. The majority of that, 900,000, relates to an unrealized gain on an intercompany loan between the UK company and the US company. That dates back to when the US company was acquired in 2010. So it's a non-trading item as a result of the movement in the pound against the dollar strengthening, pound weakness. At the end of December 2021, the dollar was at 138 versus the pound, down to 121, 122 at the end of June. It's obviously continued to fall since then. So the overriding message on the operating expenses is we're investing. That's been masked in this period by the foreign exchange differences. You can also see in the half year ended June 21, we had a positive impact from the forgiveness of a PPP loan in the US. At the time of the COVID crisis, the US government provided support to companies. Obviously, our company has a presence in the US in the form of a loan to support the continued employment of employees. And if you met certain criteria, that loan was forgiven, and that was forgiven in the period to June 21. So we had a positive inflow from that in the prior period, but obviously not in the current period. And our EBITDA, as Lionel mentioned, 0.9 million versus 0.1 million in the comparative period. So it's a strong performance on the income statement side. Move to the next slide, Lionel. Yeah. So on the cash flow, we've had a decrease in our gross cash, and that's largely reflective of financing activities. We had an increase in our bank loan facility in the comparative period last year, and in this period we haven't drawn any further on the bank loan facility, but we continue to repay that facility to the tune of around $900,000. So the net outflow, we've had an inflow in terms of operating activities a little bit of investment in working capital, and then a note outflow in relation to our financing activities. But our net cash remains strong and up on the comparative period in the prior year. On the balance sheet, a couple of things to highlight. We continue to invest in our R&D, our capitalized R&D, but you'll see that's fallen from the comparative period. So our amortization charge is greater than our development, and that's reflective of the fact that our development is really focused on improving and adding functionality, excuse me, and additional protection as new attacks emerge, as opposed to developing net new products. So our product development is really all about enhancing as opposed to developing new products. Our debt at the end of June was 1.7 million versus 3.8 million at the prior period. So we continue to repay our debt in terms of an agreed schedule, and we will have repaid our debt in full by early 2024, so 18 months from now. And as I said, net cash remains strong at 5.8 million. And that was the summary on the financial slides. Obviously happy to take questions on any further detail regarding the numbers.
Thanks, Andrew. So quick one on the solution offering. So as I mentioned, we offer 3 flavors of our smart wall platform. One is, we call it appliances, but by the way, it's mostly software. So one is our TDS solution, which is a piece of hardware and software. This is what we're selling to our customers direct through the channels as well. The one that we're selling through our strategic alliance with Juniper is what we call TDD. So basically, we're adding a software stack on their routers. And the big advantage for them is that they're able to propose routing connectivity with DDoS protection to their customers. So for us, it's a great way to leverage on the important sales force they have on the ground, and also the impressive list of customers that they have. And then we have a hybrid solution when our customers want on-prem and on the cloud. But that's a very, very small portion of our business. I think the biggest portion of our business is on those 2. If I'm looking at the portfolio, once again, I don't want to spend too much time here, but this slide shows that we have the broadest on-prem product portfolio, going from very, very high level of protection. So basically, you're putting a device, a DDoS protection device, before the router so that you can monitor and detect and mitigate all the traffic that is coming inbound, to solutions that are more like, you protect what you decide to protect, solution that you do putting the software I was explaining on Juniper to protect their routers customers, and then a solution that does detect and redirect to a scrubbing center. That to say that we're very flexible depending on the type of protection that our customers want. And then we have a full range, as I was explaining, of services, pre-sales and post-sales services. In terms of differentiators, a couple of things I'd like to mention. So technology differentiators is basically the time it takes for us to detect and mitigate an attack, few seconds, the fact that it's fully automatic, 98%, and the fact that we have a very sophisticated deep packet inspection technology. We're inspecting not only the packet headers, but also the payload, which makes, the detection and mitigation extremely accurate for large attacks, which normally are easy to detect and mitigate, but also for very small ones. And then there are differentiators that are linked to the profile of the company in terms of being the expert, the specialist in DDoS mitigation. And we are probably the only company that is 100% specialized on-prem DDoS protection. The fact that we're very, very flexible, that we have an amazing level of support, and for a company our size, the impressive list of customers that we have. So that's very interesting. Those are the market trends that we're seeing on the DDoS market. And I will explain how that is relevant to what we do and why it plays in our favor. So first, the attacks are becoming more and more complex, using multi-vectors to attack a target. And the fact that we are the specialists in DDoS protection, that we have a very sophisticated deep packet inspection, as I was explaining, inspecting everything, makes our detection and mitigation system very, very accurate for all types of attacks. The fact that we are extremely fast in detecting and mitigating allows us to solve the 80% of the attacks that are below 10 minutes. So if you're taking 15 minutes to detect and mitigate an attack, you will not see 86% of the attacks, which could be a big problem. 98% of the attacks are small attacks. So same thing, if you don't have a very precise, accurate way of detecting and mitigating, you will miss the big picture. And then 68% chances of repeat attack within a week means that if you're not automatic in detecting, mitigating the attacks, you will need an army of people to handle your DDoS problems, which will mean for our customers an increased level of OPEX. So because we're the specialist and because we have an answer to all those trends, I believe it puts us in a very good and competitive situation. So let's go back to the strategy and how we are progressing over time. For some of you with whom I've spoken, we did the following. So the company has been 8 years in developing and marketing DDoS solution. So for the first 6, 7, 8 years, I mean, the company has worked extremely hard, first to develop a great solution. We're still using the basis of the same platform that obviously we've made evolve, but still, I mean, the same base or smart wall portfolio. We increase in terms of features, in terms of throughput, but still the very good platform that we have. So we've developed a very, very solid product and solution. Two, I mean, we built some impressive teams in terms of, R&D, support and maintenance, operation, sales and marketing. So very strong teams. And then for a company of size, as I said, an impressive list of customers and references. The leaders, you saw some of the logos, the leaders in their domain. 2 years ago, we launched what I call an enhanced customer-centric strategy, very much focused, as Andrew was saying, very much focused in growing the top line. Because we had all the bases to be successful, a good product, good people, great references. It was all about growing the top line. So this is where we put the focus. So as Andrew explained, we are investing a lot in sales and marketing. And basically, this is what we've been doing, over the 6 pillars that some of you saw, which are here, but I will explain in a minute what we've done. So obviously, the market environment is a very favorable environment, and we're leveraging on that. We are growing faster than the market CAGR, as you have noticed. The market CAGR is around 15%. We've been growing anywhere between 25 to 74% over the last almost 3 years. We are investing a lot on sales and marketing, and we are doing lots of initiatives in terms of sales and marketing, lead generation initiatives, strategic alliance initiatives with our channels. And we are measuring that with very sophisticated tools. And we have tools also that allows us to be smarter in how we are exploiting our database. So targeting the customers that have the highest potential of buying from us. We've been able, as I said, to attract new talent in a very challenging environment. So that you saw is becoming more global. I mean, leveraging on our partnership, both strategic alliances and channels, getting more large accounts in the segments where we're strong, and obviously doing more services, because services is a way to capture and have more loyal customers. That's the first front. So that's the market, sales and marketing, top line. And obviously we continue to invest significantly in order to maintain in R&D, in order to maintain our technology and innovation leadership. So just to summarize, so as you saw, as some of you with whom we started to speak already 2 years ago, I mean, we've been very, very consistent in what we deployed, where we put the focus, and thus for the last 30 months, we showed in the diagrams, we got some very good performance, improved performance, and became profitable. If I'm looking now at this year and the future, as I explained, the DDoS market is strong. It's probably going to become stronger with all the environment changes and political instability. We are very strong on that strong market. We probably, as I said, have the best performance over TCO ratio in the industry. We expect the cybersecurity dynamics, despite some of the, I would say, headwinds, difficult economic conditions. We expect that, that's going to play in our favor. When I'm looking at H2, we talked about H1, but when I'm looking at H2, as I explained, we invested a lot in sales and marketing. We put together lots of initiatives, sales and marketing initiatives to grow the top line, direct and with our channels and partners. We have a solid pipeline, a much better qualified pipeline. We have a very good win rate where people try our products, normally they buy our products. So based on all of that, plus the good H1 performance, we expect trading for the second half of the year to be in line with market expectations. And because we're building for not only the short term, but also medium and long term future, we feel confident about the future. So this is what I wanted to say in a nutshell. We are now open to take questions. So there were already some questions that were raised before the beginning of this session. I will go through some of them. There are lots of questions. So,
Lionel,
yeah.
Sorry, Andrew, if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. Just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Lionel, as you rightly said, we did receive a number of pre-submitted questions ahead of today's event, as well as you can see in the Q&A tab a number that have been submitted throughout today's presentation. So firstly, thank you to all of those on the call for taking the time to submit their questions. And Lionel, Andrew, if I could just hand back to you to run through that Q&A tab to respond to those where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Thank you very much. So there is a few questions that have been raised. The first one is around cash and how are we, what's going to be the usage of the cash that we have. So I will take this one. So basically, what we're doing is we're trying to find a happy medium between providing good financial performance, but also investing in the business for the future. And I think we've done a good job in that. So we will continue to invest in sales and marketing. We'll continue to invest in R&D in order to continue to grow the top line with, very competitive product. So it's a happy medium between investing in the business for mid-long term and providing good financial performance. So that's the first question. Andrew, do you want to take the second question?
Yes, thanks, Lionel. The second question is, can you provide details on the P&L impact of the continued weakness of sterling and the opposite is obviously dollar strength? The company looks cheap in dollar terms. So in terms of currency, the CORERO's functional currency is US dollars. all our selling is in US dollars, our price list is in US dollars. So our functional currency is obviously US dollars. We have some of our operating costs are in sterling. The majority are in US dollars. And in terms of our trading, the majority of the foreign exchange impact you see on the balance sheet relates to some intercompany balances that exist, and also our borrowing facility, which is is a sterling denominated borrowing facility. So as sterling comes under pressure, as it has done in the last while, we show an exchange gain in relation to the conversion of that sterling liability into US dollars. So the majority of it is non-trading, relates to financing and intercompany. The movement in the dollar doesn't affect our selling and our payments from our customers.
Thanks, Andrew. The next question is around our global footprint. So the question is, having not deployed your solution in 50 countries, what other countries are you currently looking at to expand your global customer reach? And where do you see your current cash being best utilized? So we'll take the beginning of this one. So, we're not necessarily trying to go in every country. We're trying to replicate what we've been doing successfully with some customers in a specific country and do that with more customers in the same country. So clearly, US is a big part of our business. We're doing between 2/3 to 70% of our business in the US. We want to balance that more with the other regions. And in terms of regions, clearly EMEA is one of them. So we're quite strong in the UK. We're strong in some other countries in EMEA. One of the regions that is interesting for us, because when you're looking at the size of the DDoS market, it's an important one, is Apac. So as I explained already, we're putting more resources in Apac, hiring local people, also getting some local partners, and we're starting to get some interesting references. So we'll be extremely focused in Apac, but Apac is one of the regions where we want to grow. We already have some solid references in Australia, some good references in Japan as well. So we'll add a few more countries, and we'll do more in Australia and in Japan. So growing with the existing list of customers and references that we have there.
And I guess, Lionel, those increase in territories, a lot of that expansion and that going into new territories is alongside our large partners.
Exactly.
Juniper, yeah, has the footprint and has the feet on the street, as it were, in those geographies.
Exactly.
And using their network and their selling capability to expand.
Exactly. So the other question, and I believe I partially answered that, is around the churn rate on your installed customers. We don't have any churn, quite frankly. We don't lose customers. Our customers, as I explained, are very loyal. They grow with us. The percentage of people renewing their support and maintenance contract is close to 100%. So, churn is not an issue for us. I don't know, Andrew, if you want to say anything more on that.
So there is a question that the broker's note shows 28 million revenue for the current financial year. To hit that expectation, you need to generate 20 million in H2. Is that the correct market expectation? Obviously, the market expectation is the market expectation. It's not a company forecast. But in terms of our confidence in growth in the second half, and we haven't adjusted that market expectation. We have a strong pipeline, and the investment that's been made in the first half in terms of growing sales and sales marketing, there's a ramp up required in terms of getting those resources productive, and we're confident they will be and contribute strongly to the second half. It's also fair to say that our business, along with a lot of other technology companies, we have a very strong, it's second half biased in terms of the contribution. So we've seen traditionally a very much stronger second half than first half. That's just the way the industry and the way customers transact. So we will see that continuing this year, as well as the benefit our increasing pipeline and increased investment in sales and marketing. Do you want to comment on that, Liz?
No, maybe a few words. As I was explaining, I mean, we've invested a lot in sales and marketing in the first half, so building the teams. Now the teams are more or less complete. People are now fully operational and starting to deliver both in terms of results, but also in terms of providing initiatives, campaigns that will generate results in the second half of the year. So I mean, that is in place, that is operational, and that's going to deliver results.
The next question is around gross margin. So the gross margin performance looks exceptionally strong in H1. Is this sustainable? Our margins generally driven by the mix of business we do. So our margin in the first half of this year was 88%, up a little bit from the comparative period. So it really depends on the mix. So we had a larger mix of recurring revenue and support, which is high margin, which drives that gross margin up in terms of the blended margin. We don't see pressure on our margins, and we think our margins will continue to be in that mid to high 80%, and that's very sustainable. We're ostensibly a software product. We are very efficient in the way we deliver our services and our margins. We expect our margins to remain strong.
And then the other thing I want to add on this one is we're not seeing an increased level of competition on the on-prem. So basically the landscape has not changed, which means that our strong competitive position still remains, and that allows us to be pretty strong on what we're proposing to our customers. And I think that's the last question. Yes, this is. So
Perfect.
Thank you everybody for joining today. Thanks for the questions. Thanks for making the time, and looking forward to our next update and discussion.
Lionel, that's great. And Andrew as well, thank you very much indeed for taking the time to address all of those questions that came in from investors this afternoon. And of course, if there are any further questions that are submitted today, we'll make these available to you immediately after the presentation has ended for you to review, and then add any additional responses where it's appropriate to do so. Lionel, I was just going to ask you for some closing comments, but I think you just well delivered those. So what I'll do now, if it's okay, is redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company. So if I could please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of CORERO Network Security PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you everybody, and good afternoon.